everybody. We're so happy to have you back at another episode of Happy Hour and Houses with Jess and Kel. And we're very excited to have special guests with us today.
Yes, we have our favorite local lenders, Danny and Britni with the Gilbert Group. They are back again, giving us all things lender, mortgages, loans, all that good stuff, getting you to the closing table. Okay, so what I want to talk about today, guys, is strategy for buyers, right? It's still a buyer's market. We want to get them, under contract. We want to get their offer accepted. What are some great strategies you guys are seeing to get us there?
Definitely the first step is to get fully pre-approved.
Yes.
So we don't want to have any buyers going out looking for houses and trying to make offers without getting a full pre-approval.
Agree.
We want you to be fully pre-approved for a mortgage because things do come up and there's a lot of pieces that go into getting pre-approved for a mortgage. Things like your income and employment and credit, of course. So we want to make sure all those are buttoned up before you start looking for a home.
Yes.
So we're not out there making offers on homes that we don't qualify for.
That's
just a heartbreaker.
It's definitely a great plan.
So that's always step one, is to do that. And, that process can be anywhere from about 2 hours to a couple days, depending on how quickly the buyer would get back to us with their documents that we need. It's a pretty quick process. It's not something we drag out over weeks, but we can get it pretty quickly.
Yeah, and one of the things that we can also do, we can do what's called a TBD approval. So it's essentially, they're different names, different companies, but we call it a TBD. So that means we actually go through the entire underwriting process before you even go under contract on a home. So when you're going out there and you make an offer on a home, it's essentially as good as a cash offer.
Wow.
Because the buyer's been completely underwritten. The only thing that can come back is something with a property.
Yeah,
which
appraisal.
can happen. Appraisal,
Right.
that nature.
And then you just work through that.
And
yes.
so we can, at the end of the day, we have one of those, we can close you within a week and a half, 2 weeks.
Oh, that's awesome.
It's pretty neat. So that is a good strategy even for first-time home buyers because they are going, again, we're in a buyer's market right now, like you had made mention. So we do have a little bit more wiggle room and the buyers can negotiate. You guys negotiate for the buyers a little bit more. But when it does go into that seller's market where the sellers have the upper hand, go into multiple offer situations, that's where this TBD approval is going to come into play.
And that would be on their pre-approval letter too. And that's a lot of times where we have the listing agent calling us to confirm the pre-approval. So being a local lender, we know a lot of the agents in town, so they call us directly on our cell phones and say, hey, I have this pre-approval from you. Tell me about it.
Yeah,
right?
How solid are they?
Solid.
Oh,
and so we love,
That's usually one of my
how
longest.
solid are they?
Yes.
Like, well, no, but we love to be able to say, you know what, they've actually already been through underwriting and all we're waiting on is an address.
All right.
That's so reassuring.
Definitely. So one of the things I don't understand that people aren't using more, honestly, is some of the buy downs, right? Like the 2-1. I know the 3-1 is a lot more expensive. So I think the one that's most popular is like the 2-1 buy down. Can you give us just kind of like layman's terms on what that is?
Right. So there are a handful of scenarios with buy down. So you have a permanent buy down, right? That's just where you're paying what's called points on the loan to get your fixed rate down to, let's say, just for simple math, a point is a percentage of the loan amount. So you have a $300,000 loan amount. 1 point is $3,000, right?
Got it.
So when you're doing a permanent buy down, you say today's interest rate is a 6.625. You can buy a point, you can get it down maybe to 6.125, right? So that's for the duration of the loan, the 30-year fix. The 2-1 buy down that you're referring to, that's where the seller is actually going to pay for that. So that you come in, you get the seller concessions, the closing costs paid for by the seller. Today's interest rate, 6.625. With a 2-1, you actually start with a 4.625. Okay, so that's for the entire first year. Nice. Second year, it goes up to a 5.625. And then ultimately by the third year, you're back up to today's, interest rate. The idea is with the rates doing what they're doing, you're going to refi within those 3 years.
Sure,
right.
But it's huge because that allows those that are coming from renting right now and they see this, sticker shock of like, oh my gosh, my rent, which right now actually rent is probably a little bit more than a mortgage.
Yeah,
but
they're not too far off for sure.
Right, so they see that and they're like, okay, you know what, I can for the first year, I can actually save up because I'm going to have that much lower of a payment. And then just knowing that if things don't change with interest rates.
Worst case, that's what you're
Worst case. And we qualify off the worst case.
Yeah.
So
Right.
we're not going to put them into something that they can't afford.
Got it.
We're going
Right.
to qualify for.
Right. So
Love
it can
that.
cause them a problem down the road. That's
Correct.
awesome.
Well, and something I know I'm explaining to my buyers often, and and love to explain it, but maybe you can just give us a little bit of info too, is it's hard for buyers, like, okay, getting concessions towards closing costs and prepaids and things like that, or towards your rate buy down. So I'll tell people, hey, let's maybe make a full price offer, but let's add $10,000 in for concessions. And of course, you're like, what are concessions? Which we get, because of course they don't do this and we do. But can you talk on that a little bit on the benefit of maybe why, or kind of like how that works?
Absolutely. So
Okay.
for easy math, let's just call your closing costs are $10,000.
Yes.
Okay. So if you're making an offer on a $300,000 house and you want the seller to pay for your closing costs, okay, so you're going to ask them for $10,000 in seller concessions
Yes.
or seller credits.
Yes.
You go between the two terms. But so you're going to do that. That's like offering the seller $290 with no concessions.
Yes.
Okay, so it's the same thing. So the same net for the seller before all their fees, but the same net for the seller. So that's why it's important that if they're considering offering less on a house, that's why your suggestion of let's go in at full ask.
Yeah.
Absolutely.
But then come in $10,000 lower, but that $10,000 is going to be used to pay for your closing costs.
Which you're not paying for. If you're not paying for it, the seller's paying for it. So essentially they're still paying for it and they're getting less, even though so trying to explain that to your customers, which is fine, but you just made it very simple.
Yeah, but I mean, say you offered $290 with no seller concessions or no seller credits. You as the buyer, now you're paying $10,000 more out of pocket.
Yeah.
Right.
So you're paying a percentage of the purchase price as your down payment, but now you're paying for all of your closing costs.
Right.
I mean, just off the top of your head, what's the difference in payment for that $10,000, right? For them to come less $10,000, but like, what's the difference in their mortgage?
It's nominal. I mean, it's really, it's
Yeah.
next to nothing. And then if you use also those seller concessions to buy the rate down a little bit more, that's where, again, talking with you guys, strategizing like, hey, they want their payment here. You can use that $10,000 to go towards the rate, and it makes that much of a difference.
Yeah.
Right.
So, but $10,000 off a sales price, I mean, you're talking $20.
Yeah,
Maybe,
exactly.
So
Right.
it's not
That's
much
what I try to tell my clients. You're better off, but then they're like, wait, and I'm like, over the course of 30 years, you making a payment on that $10,000, it's way better for you to keep that cash in case something comes up, or you want
have
to
an
do
emergency.
some new paint, whatever. Use that for something else rather than take all of your money for your closing costs.
Right.
And one thing that's important to us too is to give options, right? We're not just going to give you one option and say this is what you need to do.
Yeah.
So I like to do. I'm an Excel nerd, so I have my little spreadsheet that I like to use, and
This is good to know.
it's I know it's a problem.
All right, I like this.
No, but I have an Excel spreadsheet that I give everyone
Uh-huh.
to compare loan options, right? So you have with seller concessions and without, or if you go up $10,000 on your offer, what that looks like and what that does to your payment and what that does to your bottom line of what you're going to owe at closing. So that way it's, and a lot of people are visual, right?
Yeah.
Like some people can do math in their head. I like to see things too. I can do it in my head, but I like to see it on paper too.
Yeah.
So, so they like to see their options and not just hear you say them because it goes right out,
Sure.
So it's very important to show them their options and make sure that they understand them clearly and see the benefits. And we do that for rate too, right? So if you want to buy points and buy down your interest rate, like a permanent buy down, we show that option as well.
Yeah.
Like if this will decrease your payment by $30 a month. It cost you $3,000 to get there. So
is it worth it?
is it worth it?
Yeah.
And are you going to refinance before the time that you break even? And so there's a lot of strategies.
Good info for the consumer to make the best decision for them. So
And this is the kind of climate where sellers are really also open to being creative right now because maybe their house has been sitting for a little while, or maybe they're worried that they're not going to get that buyer. So they're like, bring us something creative. We'll consider it, and so it's good to have those options for them
and
as well.
that's our biggest advice to buyers right now too, is if they're thinking of buying a house in the next few months and they're kind of on the fence, like just have a conversation with us. Let's just let's see if you're pre-approved now, and let's show you the difference between if you buy now and then the what if prices increase by 10% or whatever it is, and then you're up against multiple offers. And I mean, we were on the market a few years ago when we were up against cash offers all the time, and we're going $20,000 over asking price just to get it. And so that unfortunately that kicked out a lot of first time home buyers from the market because they can't afford to compete with that.
Right.
And because they were up against that. And so I think just being able to show them this is what we're doing now, this is your time. This is the time to buy. For you as a first time home buyer. This is it.
Absolutely.
Makes
and I gotta
no
say,
sense.
like during the height of the market, right? What 2020 or around that into 2021, 2022, I have clients that are, wanting to sell their homes, and I feel like they've had the toughest time because they were at the height of the market. So I have clients who have purchased after that, and they have maybe higher interest rates because those clients do have maybe 3%, and they're like, oh, but yet they
want to sell.
But man, they not necessarily overpaid, but boy, they kind of paid at the height of the market. So right now, even with the values, it's like they don't have a ton of equity.
Right.
So I mean, what's worse, paying that higher price and having less equity, or having a little bit of a higher interest rate but having more equity?
Exactly.
So
Exactly.
Yeah.
Absolutely.
Good
awesome.
point.
You guys are fantastic. So we are going to have all of their information, posted and at the bottom of the screen. So if you are looking for a local lender in our area, we obviously recommend them. They're fantastic if you want to get to the closing table, which again is the whole
Yes.
plan.
Call the Gilbert Group.
Yes. So they are amazing. So if you have any questions about the process or want to get started, reach out to us. We'd love to help you guys.
Thanks, guys.
Thank you guys.
you.
Thank you so much.